In this video, I'll be going over my year-to-date 2020 stock market portfolio performance for my Roth IRA. But before I do that, let me just say that the purpose of this channel is to educate people from a wide variety of background and experience on investing. The very first video I created on this channel was a video about how credit cards can make you money. This was back in the summer, and it was my first video, and it was completely trash, so please do not go back and watch it. Having said that, it's my most popular video on the channel, and it kind of got a lot of views considering how I only have 60 subscribers. After I posted that video, about 4 of my friends messaged me and told me that they started the credit card application process, and now they have credit cards. This meant so much to me. It's one of my personal goals to be able to teach and be mentored by other individuals, and I feel that this is one of the best ways that altogether we can improve humanity and society. Please do not take this as some sort of weird flex where I'm trying to show
how much money I have in my Roth IRA and how much better I am than everybody else.
I'm only trying to teach and encourage people to start investing, as well as highlight the benefits of a Roth IRA. I felt one of the best ways I could do this would be 100% transparent with the benefits I've received from my Roth IRA, with the end goal of helping you. Keep in mind, I do have other portfolios that have performed very well, but I really only feel comfortable with sharing my Roth IRA. If you don't know what a Roth IRA is, it's essentially a special retirement account. The main benefit of a Roth IRA is that the investments inside it will grow, and when I turn 59 and a half, I'll be able to withdraw money from that portfolio completely tax-free.
And that's tax-free money. What do you mean tax-free?
This year, the maximum contribution to a Roth IRA for someone under the age of 50 is $6,000, and it was the same as last year as well. I started investing in my Roth IRA account in May of 2019. So I made the max contribution of 2019 and 2020, leaving a total cash basis of $12,000 invested out of my own money. As of December 11th, 2020, my Roth IRA had a cash balance of $13,952. This comes out to a gain of $1,952, or a 16% return year to date. This year I kept the cash balance between 10 to 20% in order to take advantage of potential opportunity. So in reality, I earned a lot higher of a return based on invested capital, but it would be way too complicated to calculate that. Everyone always likes to compare themselves to the market. I personally think that's stupid because everyone should just invest with their personal goals in mind. When you compare yourself to the market, you're essentially chaining yourself to a market index instead of thinking with your own brain.
I understand you want to do something, but use your brain.
Having said that, the S&P 500, which is a basket of the 500 largest companies in the United States, achieved a return of around 12.75%. So you could say that my 16.27% technically outperformed the market.
And my Roth IRA and how much better I am than everybody else.
But if you compare my performance from May 2019, when I started investing in my Roth IRA account, until now, I've actually underperformed the market in this specific account. But you know what? I don't care.
I don't care. I don't care.
Because my goals are entirely different than what the market returns are. For me, my goal is to have a $6 million Roth IRA by the time I'm 59. My targeted annual return is between 10 to 15%, hopefully 15%, for the next 35 years. If one year the market has a return of 50%, well, congratulations. That's great for the market and for everybody who invested in that. But I personally don't care. I'm happy with 15% because that reaches my investment goals. Doing this allows me to invest with a margin of safety with perspective to risk and reward. There are many studies that show that 90% of people cannot outperform the market. This is very true, actually. And for many brand new investors, it might be better for you to just buy an S&P 500 market index fund and hold it for the rest of your life or until you retire. But remember, investing comes down to your personal goals. Right now, the S&P 500 looks expensive to me.
Stupidly expensive.
There are even some stocks in the S&P 500 that I personally don't like. By investing into individual companies, I have more control of the companies that I buy and can understand them a lot better. When the S&P 500 looks cheaper to me from a valuation perspective, I'd be happy to buy that and hold it forever. And while the market could honestly keep going up and up, I really don't care because I'd be happy with lower returns with less risk, which is my beautiful 15%. Have I made mistakes? Yes. Will I make mistakes in the future? Yes.
That was a mistake.
But I know as that I continue to invest, learn, and educate myself, I'll get better and better over time. Even famous investors like Warren Buffett make mistakes. So what's my strategy for 2021? Well, my strategy is to lower the cash level in my Roth IRA. I'm planning on dollar cost averaging $500 every single month into stocks. As long as nothing fundamentally changes in the companies that I buy, even if their stock goes down, I'll be happy because it means I can just buy more. Then I'll hold them for 35 years, and when I retire, I'll have a nice basket of amazing companies that I can slowly sell off and use to fund my life. With this long-term strategy, I believe that the quality of my life will increase, and I won't have to worry at night worrying about what the market will do because I know the companies that I'm buying are good companies and that they will generate wealth in the long run. There are a lot of people on YouTube who like to brag about crazy speculative bets that they've made that have generated 10x returns, 100x returns, the crazy hot stocks that are out there. I personally wish them well, and I'm happy for them and their success. I hope that they get 10 times their money. I think a lot of people fail to think about investing from a risk to reward perspective. Look at the market, compare the risk to reward. If it matches up for you, buy it. Look at other opportunities like real estate. Look at the risk to reward. If there's value in it, buy it. You should only ever buy an investment when the reward makes sense from a risk perspective. That, my friends, is when you buy. I'd like to leave with this final thought. Jeff Bezos asked Warren Buffett once, "Warren, your investment thesis is so simple and yet so brilliant. Why doesn't everyone just copy you?" Warren Buffett simply replied, "Because nobody wants to get rich slow." On this channel, we stick to 3 eternal and fundamental views. Invest based on the intrinsic value of the company, not the hype and all the speculation. Be prepared to hold your company forever if absolutely necessary. And finally, never invest in a company whose business you do not personally understand. I hope you guys enjoyed this video today and learned something. Please, if you could, leave a like and subscribe if you can. It really supports the channel and means a lot to me. Together, I hope we can all get rich slow. And if you haven't already, I'd encourage you to open up a Roth IRA account and invest what you can. Thank you very much and have a great day.